weekend, though. Ira Epstein with your weekend edition of this agriculture update for Friday, the 2nd of August, 2019, just around 1:35 in the afternoon, Central Daylight Time. What a week. It was culminated today with the president saying that he has done a cattle deal with the European Union. Now, understand, this is a small, very small deal. It is a deal. It's a good sign for possibly getting other deals done with the EU, which are always difficult on both sides. But we have a deal, and that's the good news. Cattle didn't bounce much from it. Grains got a bounce after getting beat up this week, and you know why. A lot has to do with you pulled the rug out from any hopes of China and the U.S. getting together, and those agriculture purchases that the president had been talking about. They went out the window with those 10%, with the new 10% tariffs, most likely. I don't know, but I'm giving a guess. Stock market still down, gold and silver up, copper getting smashed, and that's because this trade issue is definitely going to affect industrial production, especially out of China, the world's largest individual consumer of the copper. And you can see the currency's getting a little bounce. So, when we come to soybeans on the monthly area chart, the one thing that's very clear is back here since 2018, you haven't been able to get over that 18-month moving average of closes. Now, on the weekly charts, remember, instead of going to daily charts, we're going to just do the weekly bar on each of the following markets. And the reason is we're looking for a bigger picture. And when I look at this bigger picture, I see a market that is broken down out of what we'll call just recent congestion right here in the marketplace. Now, we understand that the market rallied from this May through this whole time frame on flooding, on concerns the crops weren't getting in, then how much of the crop got in, how much abandoned acres are there in the country, what's the yield going to be, those questions. But this week the market got hit. It was breaking before the tariffs were announced yesterday, but it certainly hasn't been looking good all week long. When you come to the chart and you see the swing line, you've got a pattern of lower highs, lower lows. That is the definition of a downtrend. To break that, you'd have to get back over on the current pattern, 918. As for where the market's been fighting a battle, well, I guess you could argue it's that 18-week moving average. You certainly got under it this week, which tells me on rallies about 20 cents higher, that's where that resistance point comes in. So I wouldn't be surprised if you just flub-a-dub back and forth in there, but with a downside bias in the market. In terms of the popular Bollinger Band theory, the market is trading within the bands. 95% of the time it does so. On weekly charts, I always pay attention. Did you narrow up like you did in these bands? You're nowhere near on narrow up. So I'm going to stick with my word, how professional, flub-a-dub. And a downside bias, bearish trend in a market that has fresh downside momentum. That's how I'm viewing it. As we take a look at meal, it's the same thing. Lower highs, lower lows, a downtrend. Bias down since you're under the 18-week average, momentum down, and just pointing to the downside. You'd have to take out 317 on this chart in order to negate the downtrend, and resistance looks like it's going to be in the 305 and 60 level, something in there. The soy oil is like that tail of the dog. I use that when I do my daily charts because right now it's not that oil's in short supply. So it has a lot to do with what they take in that bean. They crush it, they get meal, they get the oil. Which one has the value and where is it? At the present time, you still have a pattern of higher lows. This week's high of 28.72 tied the last high in the market, so it still has a higher high. The settlement today at 28.19 is still over the 18-week average, but you did have an outside week down. Now, if you take out the high of an outside week, my own theory is that if that's taken out, I look above the market at the nearest of a major moving average or the upper Bollinger Band. In this case, it's 29.30. That's if it takes it out. If it doesn't, it seems to me that if you look at this, we have 3, 4, 5, 6, 7 weeks in a row where the market has continued to play around that 18-week average and hit it. That seems to be the game there. In the corn market, this is the first time since May that the corn fell back, hit that 18-week average of closes, and it the settlement's going to be just slightly under it by about a penny. So we've got a market that's in a downtrend. I'll call the bias down because you settled under the 18-week average. Next support, if the market lets go to the downside, could be the 100-week average at 371.25, and momentum is pointing down. Playing around this 18-week average could be what the market wants to do right here. In the wheat market, if we step back, you can see last week the market still had the lower highs, lower lows, hit the first support at the 18-week average at 485.75. Next support would be the 100-week average. It hit that. The market finished today at 490.75, so it wasn't able to go anywhere after hitting all that. The momentum is down. The bias is up since it closed over the 18-week average, and the swing line down. The bigger picture, pretty neutral as far as I'm concerned right there. In the cocoa market, this market rolled over back in this time. Then, if we come back to the chart, if you take a look at last week, it closed 23.89, which is under on an outside week down, if I believe it was, 23.87, yeah, it was an outside week down. That means the resistance stays at the 18-week, and if the market's going to decline, potentially, if it falls all the way down, 22.72 to 22.84, you haven't quite hit it, but you're certainly narrowing in there. Momentum down, bias down, trend down. Sugar market. Sugar's run into a brick wall on this chart. The daily chart neutralized itself as well today. You have a higher high, lower low. Haven't been able to get up to an upper Bollinger Band, in all honesty, since back in October. So what you've got is a sideways market that's sort of churning here. It doesn't follow through when it tries the upside. On the downside, it's been very successful on breaks, getting back to lower Bollinger Bands, but going nowhere from them. Momentum is flat. The market finished today at the 1202 area under the 18-week average, so the bias is down, but you are not trending in the market. In the coffee, while the daily charts have been something of a nightmare, and for the week you're down 160 points, that's not the case yet on the weekly chart. The bigger picture is still bullish. Higher lows, higher highs, holding that 97.52 area. The bias stayed up because you closed over that number as well. You neutralize the uptrend if you get this market right here under the, I think it's 9,400 level if I'm right. Let's just check it. Yeah, 9,400 right on the head. But that doesn't turn the trend down because you just have a vertical break. Momentum down, bias up, trend up. In the cotton market, it's bearish. This market's got lower highs, lower lows, bias down, momentum down. You are putting into play the potential, and the word is all I can say is if it wants to go to the lower Bollinger Band in the 5,500 area, that number will drop when we come in Sunday on the trade, or Monday for you. Lower highs, lower lows. You'd have to take out 64.30 to negate this downtrend, but you've really got to turn momentum back up, and it doesn't want to do that so far. In the cattle market, you finished off $1 for the week in sideways type action. Momentum in the market did not turn up. I need that 17 level to get over 20 for me to say it's turned up. It hasn't. It's just sort of laying flat right here with price action. For the week, we also had an outside week down, so I'll be looking very hard this week. Not that if you're bearish, you don't want to see this week's high taken out. My theory would be if the high of an outside week is taken out, that I look for the closest of a Bollinger Band or moving averages, it would put into play the 18-week average. If it just wants to decline from here, you still have the possibility under 100. In the hog market, battleground is shaped up on the rally. You got to the 18-week average, no follow-through, came crashing back down, and I want to use the word crashing. You were down $10 this week. That's a major move. Why? Disappointment that there's not going to be pork being sent to China. It's that simple. So that took out all the air out of the market. Are you trending, though? I don't see it. You got a lower low, higher high, mostly playing in sideways action, as vicious as it is. You know, the beauty for my subscribers, I think, is the fact that they go through all this, and before the markets even open the next day, I am sitting there and I've done a video for them. Today's was quite long. I admit it. I don't like doing them that long, but there was so much to deal with. You've got the European Union, especially the Brexit situation going on there. You have U.S.-Chinese trade. Then you, of course, have interest rate policies around the world. I can go on and on. You've had weather situations in grain. You've had China not buying more of our beans. I mean, I can go on and on. Yeah, they did do a private purchase this week, but nothing very large. So I start you off this way. I'm assuming that you're going like this. Wow, there's an awful lot to digest. I wonder what another chartist might think about that. And the idea here is if you think I don't guess on myself, you're wrong. Everybody does. No, I don't lose confidence. I'm pretty confident with what I do, win or lose. I try to do the same thing over and over because so far I believe in it. Okay, it's that simple. So I start off the ideas with you like this. My chart will be black. I'm not in it. I've got a headset on and I'm recording. I'm typing away if I have to, but just think of it this way. Technical analysis, touch of fundamentals, and I'm going to give very specific. Buy here, sell there. Here's your stop order. Here's your profit objective. And it's meant for more or less the in and out type trade. And I'm not talking day trade. I'm talking more the swing type trading person because futures use so much leverage. That's the game in them. It's not the stock market of 50%. Typically, it's 90% or so. I'm going to cover the markets in this exact manner each and every time, and there'll be a slide bar that you can move here. Let's assume you just want to get to the meat markets or the grains. It'll be there, and a lexicon on this side. You can just click and get right to the area you want. Don't want you to waste time on things you may not want to study. I charge for it. To try it out, and that's all I ask you to do, 26.5 cents a day for the first 30 days. And by the way, there's no contract. Should you decide to go another 30 days, it's $15. Or at the end of that 30, you might want to go for a 1-year subscription, which is the equivalent for 12 months of $13 every 30 days. Your choice. I explain it all in detail on our website under Education or Research. You can always call my staff. They'll work with you. And you can click right here to get to that page if you're watching me on YouTube. Have a great weekend. I'll see you all Monday.